Hey traders, Nick Shaheen looking at some high flyers that have taken a beating and what can we do with them. This is one that I fought for a while. This is Zoom, and I fought it early and I lost, and so I said, you know what, I can't argue with the fans. They love it too much. I'll get out. I did a video on the 29th, I think, of September, and I warned exactly about this scenario. I didn't call for it, so I can't say I said short it. I said if this doesn't happen, then this will happen. In fact, those are probably my exact words. And let me show you the snapshot from this video. I just watched it. I always watch the video if I have time. And this is where price was. It didn't hold. And this is where I put my cursor for it, 388 and change. And I said, look, see, look what I had here. Buy the dip. That was my note to myself. So what is the story here? The story is I should buy the dip. And if you're a fan of it and we're long here and you're thinking of getting out of your long here, I don't know why would you do that, because now it's a lot better situated. And in fact, the red blue is an easy regression line, so reverted to the mean and then some. It's still in the hands of the bull. And yeah, there's a gap down here, and if markets fall, this will fall again. So it did hit my first buy the dip target, and I probably have another one here, credit put spread. So buy the dip also. It all depends on your thesis about it. It's so expensive that it doesn't have support from that. What are we talking about? Zoom. It is expensive not from profitability. I don't care about that. The PE is 500. That really doesn't scare me. It's meaningless because it's trying to grow. What scares me is the price to sales. This was 108 or 5 just a couple of days ago. Now it's down to 90. Down to 90. That is 20 times more than no, 12 times more than Amazon. I'm doing error math here. So it doesn't grow 12 times faster than Amazon. So it's just it's expensive any which way you slice it. How about I say it differently? There's a lot of hope priced into it currently. And yes, it has a good future. Yes, it made it onto the big show, so to speak. And it needs time to just grow into its valuation. And guess what? Next year, when it reports, it will roll over strong comps. So this spike happened because it grew 350% over non-COVID numbers. When it rolls over these numbers and it still grows 350, I'd be shocked. But this is where the test will happen, when it starts rolling over COVID numbers. And I don't know when these started. So time it. Book your profits before that report, and just in case, or protect your profits, I should say. Okay, so back to the price action. So let's put the lines that I have on there. And these are lines I share with members and the chat room. We do this all day, by the way. Join the chat room down below. There's a free link to it. You can test it out and see if you like it. Good people in there. No jerks, please. If you're a jerk, just don't bother. You'll be kicked out. So we have one candle that I like that happened in September, and I drew a box around it. And look how pivotal it was. I drew a line right in the middle of it, just about, and it was indeed the neckline from which they fell apart. The good news is they hit my target. The actual target of it, if you talk to a technician, would tell you it's got a lot more to go. It's let's see, 400, 500, so about 120 points from 440. So 320 is their target, somewhere around here. And this will be nice and neat, right? It'll be this candle right there. This is where I put my buy the dip number 2. So if I'm long, I don't get out here, but I realize that the target might be lower. I'm happy about, if I'm long, I would be happy about this candle and the fact that it's so close to the base, this base. Here, they just screwed up all the pictures, and then they came back and tested it for footing. The fact that they left a little bit open is not enough for me to draw action. If the markets fall more next week, sure, it can drift down into that. So these are the comments, the big picture. So let me zoom in to see if we can get some smaller picture. Okay, so it will have a problem coming back up, tackling 422. It will have a problem starting the gap, like 448. I just used the example of doing Peloton video of Intel. Well, I can use the Peloton example to this one. When they leave gaps this big, it's going to be hard to start it And once they start it, they're going to have immediate resistance right in the middle of it, just from levels. And so I would expect that even if it starts to gap, and you catch a swing up, if you're trading it, not owning it for the long term, then 462 might be in the face of you as far as resistance. And in fact, 500 and change will be tremendous resistance, but then again, therein lies the next trigger. So if you're in love with this chart and forget where it came from, please remember that it was under $70 less than a year ago. So it's $400 now, $388, whatever it is. The world changed since then, I give you that. But doing this check, this long-term, this massive move check, just should put some fear into us. A little bit of fear is good. You know, they say FOMO. We should have fear of falling. FOFO? FOF? Fear of falling. So we should put FOF in ourselves as well, because that's what keeps us alive. So we should fear falling, and this puts the fear of falling. I'm not saying it's going back down to here, but to put things into perspective, so if you don't know volume profiles, this is what these bars mean. So these are volumes of when they happened. On that day, on that day. These are the same volume bars as to what level they happened. And you can see that this entire chunk is miniature compared to this chunk down here. Look at the most traded spot is 115, 118, whatever that number, that yellow line. By a mile, the next available line is this down here. And look at this whole, how little volume there is in this chunk, because it needs time to do what? Consolidate. So what the bulls need, more than a rally, some time legitimizing these levels. Otherwise, if the markets crash, this will crash so fast, it's not even funny, because it doesn't have meat. So this is it. The upside of this is that they held the base of this rally. That's a pretty big rally, 68% or whatever. And then they gave it all back up. So they just corrected 40%. They could swing back up, but I wouldn't play. I find it hard to double down on stocks that are this frothy. And by frothy, I mean it's still young and establishing itself. Amazon is not frothy, and it moves 40% every year because perception. Perception is that it's expensive, it's momentum, whereas it's the cheapest of all the mega caps. Price to sales is under 5. So there's literally almost no hope priced in to its stock price. It's got a high ticker price because they deliver whatever, $15 per share. I mean, they're a super profitable company, and people still complain about profitability. This is a different story. This is frothy, just like all the new COVID what's it called, cloud stocks. They don't have meat yet. They only have potential meat, and Beyond Meat will be next. Actually, speaking of meat, so fake meat coming up.